The US government is considering banning Wall Street hedge funds from buying homes and forcing them to sell off their entire portfolio. And folks, if that happens, home prices in neighborhoods like this have the potential to go into a deep crash, because these investors, they bought up the homes, they lowered the inventory in neighborhoods like this, and they pushed up the prices. And now, if we start to see a sell-off from these investors, we could see potentially 30, 40, maybe even 50% declines in home prices. Because if we look at data from Redfin at the amount of homes purchased by investors over the last decade, we can see in a city like Las Vegas, where I am right now, a huge spike in investor activity that occurred during the pandemic. They bought over 30% of all the houses in Vegas, and in certain zip codes, they bought nearly 40% of the houses. So you have to ask yourself the question, what's going to happen if 40% of the demand not only stops buying, but starts selling due to this bill in Congress, which is called the End Hedge Fund Control of American Homes Act. And it would require these hedge funds over 10 years to sell off their portfolio. Any company with a market value of over $50 million that owns real estate would have to sell off their portfolio. And if they don't, they'd be taxed at 50% of the value of that portfolio. And in a second, I'm going to tell you guys the cities and the zip codes that would be most exposed to home price declines from this bill. However, we need to acknowledge something, and that's the fact that investors, these Wall Street investors, were already getting out of the housing market before this. Here in Vegas, the investor purchases are already down by 65% from their pandemic peak at their lowest level in the last 5 or 6 years. And we're seeing more and more examples of some of these houses being sold by these Wall Street investors. I was just out in Henderson, Nevada, a suburb of Vegas, yesterday, and I found a home being sold by American Homes for Rent, the second largest landlord in America. Now, American Homes for Rent bought that house at the bottom of the last housing crash in 2012 for $170,000 and are now trying to sell it for $530,000. So huge appreciation on that from when they bought at the bottom. However, they've already had to cut the price by $30,000. So this Wall Street investor sell-off could already be happening, at least slowly and incrementally, in different markets, because more and more when I travel around America, I'm seeing these investors sell their homes. And if you live in a city or a neighborhood where these investors are selling, you better watch out, because they can completely flip the housing market in the way that these investors piled in and caused prices to go up. If they sell out, it could just do the exact opposite. But before we get too crazy about this, folks, and think that this Wall Street hedge fund sell-off is going to crash the entire housing market, I have some bad news for you. It won't. And that's because these investors, they buy in specific cities in the specific neighborhoods. And in fact, hedge fund private equity investor homeowners own about 574,000 homes in America, according to a news article from Vice. And while that's a lot of homes, that's only 0.6% of the entire housing stock in America. So if tomorrow all these investors were to sell their homes, that wouldn't even double inventory on the US housing market. It would increase it by 80% on a national basis, but in certain cities and neighborhoods, it could triple inventory or quadruple inventory. And I think one issue I have with this bill is the fact that it really only addresses a small part of investor demand in the housing market, because these hedge funds own 574,000 homes. Well, that's only a small fraction of the 27 million investor-owned homes in America. That's right, everyone. According to Atom Data Solutions, there's 27 million investor-owned properties in America. 574,000 are owned by these big Wall Street hedge fund private equity investors. So that's about 3% of all the investor-owned homes. And if they sell, well, great news for a lot of home buyers, particularly in areas like Las Vegas, where I am right now, in specific neighborhoods in Las Vegas and Phoenix. Prices are going to go down a lot, but we still have the 97% of other investors that own homes in the US housing market. And this bill does nothing to address their ownership and their incentives in buying a house. And in many markets, these small investors are just as much of a problem as the big investors. So in some ways, this bill is kind of like a way for the politicians to look really good, in front of a lot of people. I think probably 8 out of 10 people would say, hey, yeah, stop the hedge funds from buying homes. That's great news. But really, it doesn't address the fundamental problem of investor demand in the housing market. And personally, what I would do if I were in Congress or if I were president and I had some agenda setting power, I would try to take away the tax advantages that real estate investors have. Because one of the more ridiculous policies that our government enacts in its tax legislation is it subsidizes ownership of real estate, particularly for investors. Investors are allowed to depreciate the value of the house in the structure by about 3% every year, which means if you were to buy a house for $400,000 and the structure is worth $200,000, you could write off about $6,000 on your taxes each year, which is why a lot of wealthy, smaller time real estate investors just buy houses and let them sit vacant because they use it as a tax write-off. So if you were to theoretically get rid of that tax write-off, get rid of the depreciation benefit for owning real estate, you would see lots of investors sell, both large and small, and that would make a really meaningful impact in a lot of different housing markets, not just in concentrated areas where these Wall Street investors bought. But interesting, folks, in this neighborhood, I was able to find a house that was purchased by a Wall Street investor. If we go over here, we could see this is kind of a townhouse, a smaller townhouse. It's around 1,100 square feet. It's 3 beds, 2 baths. Now, this was purchased by an investor called Invitation Homes, who's the largest Wall Street landlord in America. They own over 80,000 homes. They used to be a part of Blackstone. And they bought this house in 2022, April 2022, for $395,000. Now, since then, the value of this house has gone down to $367,000, according to Zillow. The prices in this zip code are down about 7% from peak. So the investor here has lost equity. They've lost about 30 grand in equity. But what's even more interesting, folks, is when you dig deeper into the history here on Zillow, after buying it, they tried to rent it out for almost $2,300 a month. $2,300 a month for this 1,100 square foot townhome. Crazy, right? Well, that's what the rents were going for back in early to mid 2022. However, since then, they had to cut the rent all the way below $1,700 a month. So the rents here in Las Vegas in many different neighborhoods are starting to go down a lot, and these Wall Street investors are being forced to cut the rent. And that's why, in some ways, this sell-off was inevitable, at least in my opinion, because these investors, it's really difficult for them to deal with declining rents in an environment where the mortgage and the interest rates have surged so much. The 30-year fixed mortgage rate is 7%, roughly equivalent to their cost of debt when they raise money to buy these houses. In addition, the 10-year treasury yields over 4%, meaning that U.S. government bonds return about as much annual cash flow as a rental property in Vegas. And so in some ways, folks, this business model of hedge funds buying houses, it might have been already over before it started with the rise in interest rates. But as I said in the beginning, the impact of this potential sell-off and the legislation, if it goes through, is really limited to specific cities and neighborhoods. I talked about Vegas, I talked about Phoenix. Another one would be Atlanta. Atlanta is a metro that these investors just absolutely piled into. They bought up a lot of houses for cheap at the bottom of the last housing downturn. Certain zip codes in Atlanta saw home prices go down 50% in the last downturn. So these investors, they just kind of scooped up a lot of properties in Atlanta and other cities for 60, 70, 80 grand, 100 grand on the cheap, and they turned around and rented them out. And according to Redfin, at the peak of the investor buying spree in 2021, 2022, investors were purchasing almost 35% of the houses in the Atlanta metro, but really it was concentrated on the southern end of the metro and some of these more low income areas. Actually in Atlanta, these investors were buying 50% of the homes. And that's the other thing about this investor home buying that not a lot of people notice, is the fact that they really target lower income neighborhoods. And they target lower income neighborhoods because the home prices there are cheaper. And so when the home prices are cheaper, they can theoretically earn a higher yield and higher return. And that's really an unfortunate aspect of how these investors did their strategies over the last 10 years, is they really focused on areas where people were already struggling to afford rent and afford mortgage payments. Those were the areas that they bought up the homes and pushed up the prices by even more, and now theoretically will crash the prices by more. Now, I don't think the US government wants a major crash in prices. That's why this legislation is going to allow the investors to sell it over 10 years, maybe reducing their portfolio by 10% a year. But if you are a Wall Street investor or another investor that owns in these neighborhoods, you're probably going to try to front run that time frame and get out fast and get out immediately, right? So I wouldn't be surprised if even on the mention of this legislation, a lot of investors try to sell out of some of these neighborhoods because they see what's coming, especially in a city like Jacksonville. Jacksonville, across the whole metro, one of the biggest areas that investors piled into, particularly on the west side of Jacksonville. Investors bought as much as 50% of all the homes, which is data from Redfin. Redfin actually used to have this zip code investor data available on their website, but they mysteriously took it down a couple weeks ago after I did a tweet thread talking about it. That's kind of interesting. It would be good if they put it back up so you guys can see the areas that are most exposed to a potential investor sell-off. But I still have the data that I downloaded from them about a year ago, and you could see in Jacksonville, majority of the investor presence was on the western side of the city, where again, they were buying close to 50% of the homes at the peak of the bubble in the pandemic in areas that are generally low income and high poverty. Now, an interesting question to ask is this legislation actually going to pass? It was introduced in Congress a couple days ago. It's being led by the Democrats. And so far, I haven't seen too much opposition to it. I suspect some Republicans are going to come out in opposition because this is kind of the government meddling in who can buy homes and who can't buy, and the government adding regulation to the housing market. But I got to be honest, everyone, this is a type of regulation for the housing market that I don't think is going to have too many negative consequences. I mean, some of these investors, Wall Street hedge funds, they might try to find ways around this. They might try to find what's called a stalking horse bidder, where they find someone to buy the house who isn't their entity and then just pay them a fee to do it. Like, that type of stuff might happen. But really, there's not going to be too many people that are sad to see these Wall Street hedge funds exit the housing market if this actually happens. Now, interestingly, guys, I polled you here on my YouTube channel, and I asked you the question: do you think this Wall Street ban of home buying and home ownership is a good idea? And the results were very, very interesting, folks. Let's take a look at the results of this poll. I asked the question: Congress wants to ban Wall Street from owning houses. Do you think this is a good idea? An overwhelming 81% of you said yes, good idea to ban Wall Street from buying houses and to make them sell, while only 19% of you said, no, it's a bad idea. Federal government regulating real estate ownership is a bad idea. So this bill would have overwhelming, seemingly bipartisan support. I think it's just so interesting to see you guys out there who are the most engaged home buyers and real estate investors want this to happen. Now, interestingly, the stock market is not taking this legislation that seriously, because companies like Invitation Homes, their stock price hasn't really budged downward too much over the last week since this legislation were announced. You would figure if it were a real possibility, the stock prices would have gone down significantly, but that hasn't happened yet. So we're going to have to see if this legislation actually gets passed, or if this is just kind of, Congress trying to flap their wings and look good for their constituents, but not actually do anything. Make sure to also watch the video that you see here on the screen right now. It's one I did 3 months ago predicting the demise of Wall Street investors. Go watch that video right now.